Ether is the second largest cryptocurrency. It works a little differently than Bitcoin, the most well-known crypto. If you're new to Ether, there are some basics you should know before investing. I'm Jim Ferrioli, Schwab's cryptocurrency strategist, and I'm going to introduce you to Ether and some of its potential benefits and risks so you can make an informed decision about whether it belongs in your portfolio. Ether is a form of digital currency for the Ethereum blockchain platform, and it can be used for electronic payments as well as to fuel smart contracts and applications on the platform. Ether's transactions are significantly faster than Bitcoin's, which has increased Ether's popularity. Like other financial assets, it can be traded, and its price rises and falls with changes to supply and demand. Ethereum functions using blockchain technology, which is a record of irreversible digital transactions that acts as a public ledger. Its blockchain, launched in 2015, allows for more complex computing operations than Bitcoin's. It enables smart contracts and decentralized, secure, autonomous apps. In fact, Ethereum can be thought of as a kind of massive, decentralized app store. Someone who uses a smart contract or application pays a fee in Ether, which helps fuel the computing power needed to operate. Like the Bitcoin blockchain, all the transactions on Ethereum need to be validated. That includes everything from payments to using an app. Unlike Bitcoin, which uses an energy-intensive computing method called proof of work, Ethereum began using what's known as proof of stake in 2022. Proof of stake lets users become validators by staking a minimum level of Ether. Once they do, they're randomly selected to validate the accuracy of the transaction information in blocks. A committee of other validators will do the same. Bad actors forfeit their stake, providing a bit of insurance. The Ethereum Foundation says that this process is more secure, more environmentally friendly, and has other benefits compared to traditional blockchains. The differences between Ether and Bitcoin also affect it as an investment. Bitcoin's long-term value depends on its adoption as a store of value, but Ether's viewed more as a potential growth investment. The bet on Ether is that Ethereum will become and remain the dominant infrastructure for a growing number of blockchain-based applications. This could fuel demand for the currency and drive up its value. Historically, Ether's market cap has been second only to Bitcoin. As of fall 2025, it was about $530 billion, having climbed from being essentially worthless when it launched. The potential for big swings in the price of Ether is one of the primary risks, and why some investors merely see it as a speculation opportunity. Fraud is another concern. Cryptocurrency exchanges can be hacked, passwords and private keys can be lost or stolen, and transactions are irreversible. Additionally, cryptocurrencies are not stored in traditional banks and lack the regulatory protections of other types of investments. There are also transaction fees to keep in mind, which can change based on trading volume and can be high. Some factors that impact supply and demand have historically caused Ether's price to move. Competition from other coins and newer blockchains like Solana is one. Government regulations are another. For example, restrictions that limit the use of Ether could cause the price to dip, though regulations that provide regulatory clarity could also boost confidence. And due to its proof-of-stake system, a lot of Ether's supply is tied up in escrow, possibly making it less liquid than other coins. Ethereum's popularity plays a role too. As users and validators come and go, Ether's usage rises and declines. Bitcoin can also lead to volatility in Ether's price. Bitcoin is the largest cryptocurrency by far, and its price movements can cause ripple effects in Ether and other cryptocurrencies. In fact, over a multi-year period, 60% of every movement in Ether can be attributed to Bitcoin, including during Bitcoin halving events. Bitcoin's proof-of-work mechanism requires a lot of computing power to validate transactions. Every 4 years, the amount of Bitcoin distributed to those who provide computing power is cut in half. Historically, this has caused a bull market for Bitcoin and boosted the demand for other coins like Ether as well. So how can investors or traders potentially profit from Ether? Like other assets, the most basic way investors attempt to profit from Ether is through price appreciation. Buy low and sell high. That can be done by buying Ether itself or using products like Ether exchange-traded products or stocks of companies that hold Ether. Ether may also work as a potential hedge against inflation, which has many indicators, like consumer prices and how much cash is in the economy. Ether has historically had a low correlation with inflation measures like CPI. However, due to its infinite supply, Ether may not hold its value better than the dollar, potentially limiting its value as a hedge against inflation. Before buying Ether, a long-term investor should consider whether they believe in Ethereum's ability to be a thriving decentralized platform. If you're a trader that sees Ether as more of a speculation opportunity than a long-term investment, there are lots of ways to participate. For example, swing and trend trading strategies like those used to trade stocks are one opportunity. There's also trading options or futures contracts on Ether or Ether exchange traded products and more. If you're interested in adding Ether to your portfolio, how much should you invest? Like other assets, it depends on factors like your time horizon and risk tolerance. But given the riskiness of Ether, an investor should proceed with caution when considering adding to their portfolio. Remember, be prepared for volatility and only risk an amount that you can comfortably lose. The world of Ether and cryptocurrencies can be fast-moving, risky, and exciting. So for the latest market commentary and education, subscribe to the Charles Schwab YouTube channel and check out schwab.com/learn.